If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi, and welcome back to Courtside Financial, the podcast where we talk about business and technology. In today's episode, we're going to be talking about NIO. You guys know that I'm a NIO investor and I'm an avid follower of NIO. So we're going to be talking about NIO's upcoming earnings report that is supposed to be released on June 6th, which is right around the corner, coming up pretty soon. So let's do a preview. This is going to be a super interesting video, super insightful, super thoughtful. If you find it any of those things, or you're just new to the channel, make sure you hit that subscribe button. We're trying to get to 10K before the year is over. If you could help us out with that, we'd be ever so grateful. Make sure you hit the like button, click the notification bell icon, and leave a comment down below. All your engagement really does go a long way in helping out the channel, helping the video to reach a broader audience. Now that we've got that out of the way, let's get into the episode. First things first, let's talk about NIO's recent performance. Yes, they've had an uptick in deliveries over the past few weeks, but let's not get carried away. The first quarter of this year was rough. Losses piled up, and deliveries fell short of expectations. NIO spent quite a bit to promise us big things, but did they deliver? Anyways, NIO's earnings report is just around the corner. That's going to be Thursday, June 6th. To be exact, before the market opens, analysts are projecting revenue of $1.44 billion, which is down from last year's revenue of $1.55 billion. They're also expecting a loss of around 36 cents per share. But here's where it gets interesting. Despite the drop in revenue, there's hope for increased earnings per share. Let's break down why. Last year in Q1, NIO delivered 31,041 vehicles. They're slightly down with 30,053 vehicles, a difference of 988. Now, if we look at the selling price from Q4 2023, which was around 43,500 per vehicle, applying this to the Q1 2024 deliveries gives us about 1.3 billion in vehicle sales. Not too shabby and pretty consistent with last year's figures. But wait, there's more. Other revenues last year were 21.4 million, which jumped to 234.4 million by the end of the year. Combine that with our 1.3 billion from vehicle sales, and we're looking at a potential revenue of around 1.5 billion, already exceeding analyst expectations. Now let's add an intriguing twist to the story. February 26, 2024, I've talked about this on my channel on my own. I've talked about this with Marty in the video where we were talking about 4-7. He actually brought this to my attention before I even put it on the channel. So shout out to Marty. NIO struck that deal with an upfront fee and future royalties. While the exact amounts weren't disclosed, estimates suggest at least 100 million.
There's a lot more to the picture. The picture changes in the spring because suddenly we hear the name 4-7 come out. And 4-7 is a very unique situation for NIO in that they have licensed, NIO has licensed their technology, their intellectual property to 4-7. The thing is, 4-7 is not a Middle Eastern company. It's a British company. It's in England. They're located in England, and they are, even though it's not a secret that NIO is invested in them, they're still running in a stealth manner, telling their future audience that they're going to manufacture EVs in a new way, and that new way is the NIO way, right? So 4-7, what the interesting thing about this, and this is what a lot of investors are missing, CYNV had to pay NIO major bucks to get this licensing agreement. Under this technology agreement, NIO will receive technology license fees comprising of non-refundable fixed upfront fees, non-refundable upfront fixed. That means those fees are happening in Q1. Those fees have been paid. People should keep an eye on that for the next earnings because that number will be in the Q1 earnings report. NIO gets a fixed upfront license fee plus royalties determined on the future sales of licensed products by 47. I would also add into that my own opinion that they are probably going to be purchasing a multitude of OEM products from NIO. It could be the motors, it could be autonomy features, it could be batteries. It will definitely be batteries because 47 doesn't make batteries, and NIO has the best battery in the world that'll do 1,000 kilometers or 610 miles. Nothing is close to it. Tesla's at 408, and NIO is over 600. It's expensive battery, but it's a semi-solid state. But NIO and CATL are highly involved in it. Also have a company called We Lion that probably did most of the research and development on it through funding from NIO.
Adding this to our previous total, we're looking at revenues of around 1.6 billion, comfortably beating analyst predictions of 1.444 billion. But revenue is just one side of the coin. Let's talk about expenses. In 2023, R&D expenses were 559 million, just about, contributing to a total loss of 933 million. However, NIO CEO William Li has hinted that much of the R&D work is now complete, signaling a potential drop in expenses moving forward. Plus, they've slowed their battery swap stations expansions and retail store openings, further cutting costs for the company. And what about Anvo? While the costs for this new venture are still uncertain, production isn't set to start until July. So Q1 earnings shouldn't take much of a hit from Anvo expenses. Anvo shouldn't be too much of a factor here for this particular earnings call and report. Considering all these factors, it's plausible that NIO may exceed analyst expectations by 100 million to 200 million. Combine this with cost savings from R&D expenses getting reduced, slower expansions, previous layoffs, and we could see earnings per share improve beyond the anticipated loss of 35 cents per share. With promising deliveries expected on June 1st and a potentially favorable earnings report, NIO stock itself could see a rise. It'll be interesting if we see the stock climb back to double digits over time, but we'll see. Don't want to get too far ahead of ourselves. Like I said at the beginning of this video, still negative things to consider, and these are just things to think about. We'll see how everything happens on the 6th, and I'm interested to see Deutsche Bank's thoughts when they do come out. That's all for this episode. Thanks for tuning in. Make sure you hit the like button, make sure you hit the subscribe button, click the notification bell icon, leave a comment down below. Hope you found it valuable, insightful, at the very least entertaining. Hope you're having a good Memorial Day weekend. We'll catch you in the next one. Thank you.